Hello, everyone. I hope you're doing well. Let's get into the analysis of the Nasdaq, Dow Jones, and S&P 500 from Phoenix Finance. All right, we'll start with the Dow Jones. If you remember from previous analyses, we said we have an ascending channel, and once this ascending channel breaks and pulls back, we expect a sharper decline for the Dow Jones. This has happened. Our channel has been broken. We have a pullback to the bottom of the channel, and currently, we have two very important support levels. First, we have the 45,000 range, which is very, very important. You can see that it was previously support and resistance, and once broken, it turned into resistance turned support. And the next level, if it can break this, which is something around, you could say it's around 8%. If it wants to break this level as well, the next level is 43,300, and after that, we come to we reach 41,600. If this were to be broken, which I think for now, in the short term, $45,000 is within reach, and the price will likely reach this range in the coming days. Let's move on to the S&P. One of the ugliest charts we can see is the S&P chart. It makes no sense at all. But I've drawn a FIBO. And based on this FIBO, I want to analyze what's going to happen to the S&P. Look, if we draw a channel where the bottom of our channel is the 0.5 FIBO range, it's very likely these levels are, first of all, let me say it's bearish, meaning we'll likely see the S&P drop. We could see it reach the 6,000 range. The 6,000 range, between 5,920 to 6,185, is our golden zone, where the S&P could potentially drop to before continuing its path or even dropping further. But what's important for us now is that first, 6,400 or 6,500 must be broken. This 6,500 range, if 6,500 is broken, we can expect to reach 6,100 and even 5,920, which I said is our golden zone, and the chance of a reversal from this area is very high. But if the trend is very strong, it could drop further. If oil prices continue to rise and the market, because it's fleeing risk and becoming risk-averse, it's possible we'll see a deep stock correction and a market crash. The Dow Jones was clear, and you can see the S&P stance is bearish. Let's check the Nasdaq and see how it's doing. Look, the Nasdaq is in exactly the same situation. If we look at this support, which is very, very strong, see how many times it's hit it and been rejected from here. Twice, 3 times, and now 4 times. There's a high chance it'll hit it this time and drop. I'm not saying it'll definitely drop. But as we can see, a drop is more likely than a rise. If we draw a trend line, if we want to consider a bullish scenario and see what that looks like, look if it can break this trend line and stabilize, it's possible we'll see another rise, even up to this peak. But given the conditions of the Dow and S&P, the Nasdaq is in the same boat. Even though every time it's hit this support, it's bounced back up. But this time, this support might break, and if it does, it could reach 23,000 or even 21,000. We have to wait and see what happens in the coming days and next week. Will the conflict between the US and Iran reach a resolution, or will it continue and cause oil prices to go up? In that case, the system becomes risk-averse, and that's when there's a high probability we'll see a further decline in the stock market and indices. I hope you found this analysis useful. Until the next analysis.